Greetings, Dr. Jeffrey Scott here. This is my Market MRI Pro update for December 18th, 2025. Oh, what a disappointing day today. Yeah, my account was up. Your account was probably up. So that's a good thing. But after the morning news came out, probably got data which would be supportive of the Fed cutting more than less. Markets had a big rally, and by 10:30 it was done, and it rolled over and traded and gave up much of the gains the rest of the session. Again, it's December 18th, 2025, Market MRI Pro at gmail.com. My Google group is Top Down Trader. My website's marketmripro.com. After hours, markets are down a bit, nothing significant. More concerning, Nike's down 9.4, FedEx is up 2.1. Quiet after hour session otherwise. As always, this video and everything I do should be considered for educational purposes only. Anything I talk about should be taken in the spirit of education, not investment advice. The intent of the video is to demonstrate how I use my tools for top-down analysis and trading. Trading involves risk. You are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock mentioned in this report. Trading stocks and options should be considered risky. You should always consult with your financial advisor before making trades. I have tools in multiple platforms, but am an independent trader. Google group is called Top Down Trader. How do I join? You go to Google Groups, you look for all groups, and then you search for Top Down Trader. You sign up, you control it. You're there. You want to quit, you quit. You'll get timely discounts, offers to closed educational sessions, interactions online with me, and a lot of other smart people. Hope to see you there. For more information about the program, purchasing, anything else, email me at marketmripro@gmail.com, and for customer support, coding at marketmripro.com. Hope to see you in Florida in my educational program late in 2026. All right, let's start with looking at the earnings, or excuse me, the data in the daily briefing tool. We could see that the Qs led the markets higher, up 1.45. They were as high as 2.09, opened at 1.56, so they closed off the open, off the high. Similar with the SPY, up 0.76, Russell up 0.59, and the diamonds up 0.15. The dollar was up 0.07. Bitcoin down another 1.5%. It's down almost 8% over the last 5 days, finishing at the bottom of the range, and volatility was actually lower today. The part I don't like about the indexes is although they all closed up, they all closed closer to the bottom of their range. 52-week new high, new minus new lows, NYSE remains positive. We flip back to positive on the NASDAQ, that's good. Need to see more new highs. If we look at the S&P 500 sectors, technology, which was a laggard yesterday, led, followed by discretionary utilities. Kind of the data center game was back. I think that was driven by Micron's pretty spectacular earnings. From a leadership perspective, if data center is working well, we see things like uranium, semiconductors, solar, clean tech. And you got social media, artificial intelligence, aerospace. All of these are up over 1.5%. If you look at the three big indices, which we have the stocks put into industry groups and sectors, you can see that 54% of the S&P 1500 were up, 53% of the NASDAQ, and 57% of the NYSE. All that, although that is very bullish and positive, they were in the 70s earlier in the day. And across the board, we had strong sectors compared to the prior day, industry groups as well. So a strong day in the U.S. markets. If we look at the timing model, okay, on the daily timing model, yesterday was bothersome because we lost the daily buy signal on the spider, the Qs, the Russell. The only thing that's different today, yes, they all were up, but the only one that got above the WMA is the Russell. But until the bongo flips, you're still in a downtrend with a sell signal, daily Qs, spiders, Russell. We're still holding on the diamonds. Weekly, don't think we saw any deterioration today, and we didn't. You could see we're above the WMA, despite the fact that on the spiders and the Qs, the bongos have switched. How do I put this together? This is at best case, uptrend under pressure. Worst case, could we be rolling over? I think those have to be a concern. How have I handled it? Well, I look at the breadth indicators and others to help me, but I have not really been buying a lot of new stocks over the last several days. I have been closing positions, raising some cash, and I've got a number of in the money options that are still left, which will probably not be rolled. I'll probably raise cash unless the market opens up higher and it looks like Santa's here. The good news for you, if you like Santa rallies, is we're about to have the period of time when you expect it to start. There is no guarantee that it starts. If you look at the US index ETFs, it was a disappointment today. You could see here that the spider traded down into the 50 and bounced. I mean, that's a good thing. It's a great place to bounce. It moved up, traded down, and traded higher, closed up. So up today, 0.76, but well off the highs. Notice what's happening on the seasonality. We have now gone through the period of time that suggested a pullback, and now seasonality, whether I look at it over 5 years or 10 years, says now's the time the market's supposed to go higher. I always believe technicals trump seasonals. So right now, seasonals are suggesting it's time for Santa to come and visit. So we shall see. So I like the fact we held at the 50. I would rather see an open candle, meaning it closed above where it opened, but I'll take a positive day with a close above the 50. The Qs. First ones to break almost got down to the 100-day moving average, which is what bounced before, ran right into the 50 and failed, gave us a doji. So an indecision day. Which way will it go tomorrow? Don't know. Similar to the spiders. We have now finished the downtrending seasonality, and we're getting a signal that seasonality says we're supposed to go higher. A lot of factors at play, and seasonality is just one. Diamonds, certainly got a flag here, traded higher, thought it might be breaking above the flag and closed below where it opened. Still trading above the 17. Seasonality has turned positive. It's hard for me to be worried about the diamonds when it's still above the 17, but the overall market has me concerned, and that's what matters. The VIX, well, if we were rising on the VIX fast, then that would be bothersome. We're not. The VIX was actually down a bit today, 4.5%. We are off the resting area. Kind of looks like we're going higher, and I think that's something critical to look for. The VIX goes up, the markets are probably going down, and the dollar, which is well off of its highs, which will be back further to the left here. What's it doing right here? It was up today just a bit, 0.2, 0.07. It's in a consolidation area well off the highs, probably not a major factor here. So the story to me is you could certainly make the argument that we've had a pullback. We've pulled back to obvious support. We've bounced. We've held. Santa's supposed to start coming soon. Maybe we get a rally here. I felt that way at 9 o'clock today. I felt that way at 10 in the morning. And by 11, things started to go against us. One of the things that, all right, if we look at commodities where gold and silver have been on fire, you can see gold today was down a bit. It's a red candle, down 0.18, higher than it opened, but clearly a doji right off all-time highs. Still expect gold to go higher here, but we shall see. Silver, which has been a rock star, has really performed well. Just off all-time highs, a little bit of a pullback here, but notice a little bottoming tail. So only down 1.56 after just a massive up day of almost 4.5%. on Wednesday. If we look at oil bouncing around below trend line, natural gas, both of them look ugly. And you could see, I guess, in favor of the bulls on the stock market, the 10-year was down zero point 0.7 today, and the 30-year was down 0.48. Probably because of the economic data. I think the smart money controls the far end of the curve. And if they believe that we're going to create inflation by rate cuts, then the long end's going to go up, even if the short end goes down. The fact that they're down today and the numbers came in soft goes against that premise. The buckets don't show us anything, no signals bullish or bearish. When I get to 20 or 25% of the stocks above or below the bands, I get attention. However, market breadth. This just shows the frustrating day on the NYSE. Kind of opened, traded up, massively traded higher, and closed just above where it opened. What a disappointing day. Still kind of flagging on the NYSE composite above the 50. And then the NASDAQ's the opposite, where we're struggling to get back above the 50. Now, there was a big development tonight for fans of the Hindy. If we go down below, you'll see we had the second Hindenburg moment in a row on the NASDAQ. So somebody put in the YouTube video last night how much cash. I'm going to have a lot more because of that. I don't trust it. This reminds me of 24, was it 23 going to 24, 24 going to 25, when we started seeing Hindis at the end of the year and then the market sold off in the beginning. So I'll be very careful when I see that second Hindi. Otherwise, pretty good on the AD, the up downs, AD lines, up down volume. So new high, new lows, advanced declines, and up down volume are all positive on both indexes, and stocks above the various moving averages up a little bit. So not a bad day breadth-wise, but that Hindi's got to have me concerned. Should have you concerned too. Market breadth, new high, new lows. The good news is the short-term 13-week 0.71, 0.76, 0.79, and 0.46 are all pretty neutral, telling me that there's no pressure of too much movement short term that would prevent us from going higher. So I put it all together. That Hindi bothers me. The fact that we sold off after a nice open on Goldilocks economic data has me concerned. I am not adding to my positions until I see the market give me something, whether it's a O'Neillian follow-through day, which God knows if we'll see one of those for a while. I'll take something positive. Um, Opening and trading lower the rest of the day is not positive. So big options expiration day on Friday. I am going to lighten up some more. I am okay going into the rest to the new year with a lot of cash. I think 26 is not going to be as easy for me or anybody else as 25. And so caution might be warranted. I really was excited at the open today and then it kept trading higher and higher. And I'm thinking, is Santa Claus here? I think he was replaced by the Grinch about 10:30. If we look at the ratio charts, it reflects what we saw today. Technology had a little blip higher, but has been weak for a while. Energy is falling, had a weak day as well. Staples and discretionary both have been doing okay, which is kind of weird to me. Financials doing okay. Industrials have softened of late, and gold and silver are helping materials. But I'd rather go to the timing brief to look at market rotation, actually to the JS layout, my bad, to the top down, and look at what was the leading sector today on a strong day. And it was utilities, industrials, and discretionary. That's interesting because, but Jeff, you showed us that technology led. Well, there's a big difference between the S&P 500 and what I have, which is a much broader index of 3,700 stocks. So you're going to see differences. Let's look at two-day strength. And we got utilities, discretionary, materials. Let's look at two-day strength on the industry groups. Take the top 10. 1, 2, 3, 4, 5, 6, 7, 8, 9, and 10. And then there's multiple ways of dicing and slicing. Let's just see what's been strong over the last couple of days and take a look at some of these. MELI was up 2.5% today. But boy, it's coming from a low level. Maybe it's a good time to buy. AutoZone looks just as bad. TLN is a utility that's often linked with data centers. I like to see a break above the 50. Um, Carvana, a name that I don't understand. Yes, I know exactly what they do, and I'm not trying to be a naysayer when it comes to them. But what I don't understand with Carvana is the state of the used car industry down here in Florida is not great. Yet Carvana continues to do well. Gosh, one of the leading patterns. Tesla, we talked over the weekend, said it looked like it would go higher. Sitting here, broke up, all-time highs. All-time closing highs were Tuesday. Um, DRI, Darden Foods, Olive Garden, I think, pulling into the 200 and reversed. So one thing you could say by looking at the leading stocks here, for the most part, you have things that have been out of favor. Albermy is a lithium stock. It was a leader and it got clobbered, and now it's coming back. Kind of looks interesting here. Short term, is it overbought? High jumps at 96. I think it is overbought, and you're going to have minus 74 cents versus minus $1, so there's some improvement there. Um, I think it's a highly volatile name, but it's been in a nice run, especially as batteries have become an issue, not just for Tesla and others, but also on the data center story. Wingstop is one of these stocks like Darden, um, like AutoZone and Mercado Libre that are trying to work their way back. So when you see rotating markets, you're often going to have a hard time finding really attractive higher highs, higher lows. You're going to find things that perhaps are starting to move. But Amazon is one that kind of woke up today. Now it ran up to the 50 and failed. Still had a nice day. It was up 2.48%. And that's one that I'm going to be watching closely because a break above the 50, I would think that would be something. Notice though, I've looked at 10 charts. If I told you anything was one I want to buy tomorrow, not really. A lot depends on what the market does. The other way to look is from a bottoms up. We'll go the impulse. Let's just take a look at my A pluses and my A's. On the A plus, and I've asked, oh, he took it out. So no A pluses. That funny bond thing isn't here anymore. We took it out of the database. If we look at just the A's, do we make any A's today? And actually, I noticed this was an issue. Give me a second to fix this. The numbers, there should be 3,000 or so stocks here. So let me go back here to the base and let's make sure we have all, okay, let's go back and check the A plus again. And we'll see, okay, so it's still there. I asked Praveen to take it out. I'll ask him again. ARBKL, which is an 8.75% bond, but it's no longer trading. Dawn, day one pharmaceuticals, biotech pullback, nice breakout, cheap stock, looks interesting. You're not going to see any earnings. It's a biotech. It doesn't have a drug in the market. You can highlight it to learn about it. Biotech has been good. Just seems to be slowing down of late. If you click up here, you can get the news. Surges ahead of promising 26, bullish. Probably reason to read about it from a chart perspective. It's not overly extended. It's breaking out. It's got the double momentum signal, which I like so much. I don't have anything wrong with Dawn. Infosys also looked interesting to me, breaking out a series of higher highs and higher lows. You highlight it, it tells you what they do. Consulting, technology, outsourcing, and digital services. You look at earnings per share, it's going to have 20 cents versus 19 cents. So it's growing, it's just not growing very much. You can see revenue is growing, trades at a multiple of 24, pays a decent dividend, 3.2%. Got the double. And then PMT made the A list yesterday. We talked about how it was breaking out above the 200. It pays a huge dividend, 16.57. Don't always know that that is going to be stable. I think we saw some news that talked about alternative vehicles like bonds paying 8.5%. I think it was somewhere was in this note. But look at what it did today. It gapped up on and stayed and closed near the high. So PMT and Dawn and INFY, there's a reason why they're A plus stocks. They each look better to me. And then if I just look quickly at the A's, gotta love what a firm is doing. I hate the business they're in, the buy now, pay later. Don't understand it. 28% going to be compared to 23%. So it's growing, has a big multiple, doesn't pay any dividend. Earnings are not due to February 5th. Beautiful breakout above the 50. Um, Out of a squeeze with a breakout in momentum and volume. Relative strength looks good. I like the firm. First Solar, I'm already in. We'll see if it can get above this line and break out. Since it's failed there 3 times, I probably wouldn't buy it until it breaks above. GGAL, we talked about a week and a half ago. It's a biotech. Don't know much of. I thought it was. Take that back. This is not Galactin. This is Grupo Financial. This is a bank. It's going to have 95 cents versus 31 cents. No, that's '08. Oh, we don't have a February last year. Don't know what it's being compared against. But if I look at it on pure technical grounds, a big breakout, pull back to the 200 and the 50 and broke out here. It's got good seasonality. Squeeze, breakout momentum, relative strength OBV setting up, not extended. LXCO. Okay, just looking at anything that looks interesting here. That's going sideways. PennyMac, this is 2 days in a row. It made this list. It made the A plus. The Real, I don't understand this company. I guess I know what they do. It's not my demographic. It's a really nice uptrend. It's a cheap stock breaking out here. RSKD, riskified. Sounds like it's in the insurance technology. E-commerce risk management. Create trusted relationships with customers. All right. Cheap stock. SGML. Another lithium. We saw Albemarle, which was a nice looking stock as well. SIBN. SciBone, a healthcare stock. Breaking out here. And lastly, VTR. Sorry, when you do these at home, people come in and talk to you when you're doing videos. Um, Consolidating after a run up. So all in, there's actually some decent looking charts here. I think probably my favorite looking chart is a firm. And then on the A plus list, I'm partial to just look at that very quickly. I'll make one of the doctors who work with me who has a big position happy. I think Dawn looks interesting. I'd want to read the story. It's nice to buy these biotech stocks before they have their big runs. So there's a couple things to look at. I'd be cautious. I think this market is dangerous here. We have quadruple option expiration tomorrow. Santa Claus is supposed to come on the 20th. Looks to me like seasonality, it's ready. Well, let's see what the market does. Have a great one. We'll talk to you over the weekend.